The wrong answer is owning 0 Bitcoin. The really wrong answer is being short Bitcoin, but God, I don't need to go into that anymore. Effectively, if you own 0 Bitcoin, you are very irresponsibly short the most important risk or insurance contract you'll ever see in your life. I believe it's the best asymmetric return opportunity I've ever seen. And why can I say that? I'm 58 fucking years old. I'm not a 24-year-old kid that has just stumbled upon this thing, okay? I've lived in the trenches for 30 plus years. So I can say it. And all due respect to the younger kids that are 20 years old and knocking it out of the park with their analysis, dude, you got to sweat it. You got to sit in a wrist chair where your sphincter is so fucking tight, you've never in your life felt the pressure of managing money until you see the opportunity that this presents.
Canadian Bitcoin and former fund hedge manager Greg Foss recently gave a passionate pitch on why everyone should invest in Bitcoin. Despite spending over 30 years as a fund hedge manager, Foss describes Bitcoin as the best asymmetric return opportunity he has ever seen. For every billionaire like Warren Buffett and Charlie Munger who do not see Bitcoin as a great investment opportunity, Foss points out that others like Bill Miller and Orlando Bravo have really put in the work and realized that Bitcoin is the greatest investment asset. Foss also talks about how Bitcoin can help investors reduce their portfolio risk. With both the NASDAQ index and long bond down by double digits for the first time in the same quarter, Foss declares that it is time to ditch the old investment strategies and adopt the Bitcoin standard. The former fund hedge manager shares some interesting insights backed by over 35 years of experience. So ensure you watch the video, hit the like button, and subscribe to the channel. Enjoy the video.
On my screen, what is the volatility of a straight line, assuming this is a price and time chart, of a straight line that goes from the top left to the bottom right? What is the volatility of that? It's 0, right? It's absolutely got no volatility. But are you happy owning that asset? Fuck no. It's gone from this price down to this price, but according to mathematics, using volatility as your risk metric, it's not risky. Okay. Vol is defined as standard deviation of returns, and it's been accepted as a risk measure on Wall Street. It's value at risk. It's all these risk measures that the Wall Street banks use to calculate the pools of risk that the bank is having. Some of them make sense, some of them don't. Again, I'll point out the volatility of something going from the top left to the lower right in a straight line has 0 vol, and the P&L on that position, you don't want to be the trader that owns that in a long position. You'd like to be short it, but you wouldn't want to be long it. At the end of the day though, vol is an accepted measure. So Bill Miller, very smart asset manager, comes out, who supports Bitcoin. I think he has 50% of his net worth in Bitcoin. He goes, volatility is the price of return. Okay, so that's another way of looking at it. Okay, something that is sawtooth like this, but is going from the lower left to the top right, is volatile and therefore risky. But look, the line is like this. That's what you got to look at. And then you turn it into log scales. Like, that's a smart way of looking at things as well. And people should get comfort. So I can say it, and all due respect to the younger kids that are 20 years old and knocking it out of the park with their analysis, dude, you got to sweat it. You got to sit in a wrist chair where your sphincter is so fucking tight, you've never in your life felt the pressure of managing money until you see the opportunity that this presents, okay? So you got to get a tight sphincter at least 3 times in your life over managing money until you can come out and say it's the best asymmetric return opportunity you've ever seen. So with all due respect, if you're 20 years old, you have not done that, doesn't mean you're not super smart and adding value to our ecosystem. I'll just finish my little pitch on this basis. Listen to guys like Bill Miller, listen to guys like Orlando Bravo, listen to guys like Marcelo Clore. These are people who are equally as successful as Charlie Munger and Warren Buffett, but have also done the work and have come at it from a different angle. Okay, you can reduce your portfolio risk overall by putting Bitcoin into your portfolio, especially when bonds are providing no balancing against equity market drawdowns. This is the first time in history that the NASDAQ has been down double digits and the long bond has also been down double digits in one quarter. There is no risk absorber in a market where interest rates are under pressure to increase and there's no room to bring them down again. Okay, it's been an ugly, ugly quarter for the 60-40 portfolio, 60% debt for, 60% equities, 40% bonds. There's also a rule of thumb that whatever your age is, that's how much bonds you should own in your portfolio. So someone who's 80 years old is supposed to have 80% of their portfolio in bonds. Guess what? Bonds are getting crushed. They're down 10%. Your portfolio just got rinsed, okay? You're getting rinsed and you're in these safe assets. No. Look outside the box of the last 40 years. Look to Bitcoin, understand the diversification benefits of Bitcoin, not diversification, diversification. Diversifying is selling one tech stock and buying another tech stock, okay? They're all getting hit by the same risk off beta, market beta, and everything like that. Models break down because people want their money back.
If you were still using old strategies like having 60% of your assets in equities or using your age as a metric for investing in the bond market, Foss urges you to look to Bitcoin so you don't get completely swept away in the storm. The former fund hedge manager also gives some important suggestions to Bitcoin investors and prospective investors. Don't focus on the hole in the donut, but on the donut as a whole, Foss counsels.
So, Jeff, wise advice. You know, we have a lot of pretty smart people in the Bitcoin community. What you need to do is lower your time preference, extend your understanding that you are reducing risk by putting Bitcoin in your portfolio. And I use this line at the Bitcoin conference. I got to say it again. When I orange pill someone and they decide to get up to the 5% allocation in their portfolio, it's like they forgot what the other 95% of their portfolio is. And they're focused just on this 5% little nugget. Focus on the donut. Don't focus on the whole, okay? Understand that Bitcoin is a donut that people can always poke a hole in. Oh, it's too volatile. Oh, the blockchain could break. Oh, you know, governments can ban it. You know what? Zero probability events, they are not, but they're low probability, so that you should focus on the donut, not focus on the hole. The hole is the tail risk, okay? Now, what you need to understand is it's a probability distribution. Any risk investment is a probability distribution, and you tend to play probabilities. That's the way you survive in the risk markets. My tagline, all I bring to the table is 35 years of mistakes, right? Like, I've been doing this for 35 years. Trust me, I've made my share of mistakes, but you learn to protect your winners and shed your losers. That's the only way you can survive. So play probability distributions. My price target for Bitcoin is $2 million US per Bitcoin in today's dollars. The market is giving me a 2% chance I'm right. And I'm not 100% certain I'm right, but man, oh man, am I more than 2% certain I'm right. So it's like going to the racetrack. I think I might have said this with you as well, Q. The racetrack is giving you crazy good odds in your favor, crazy stupid odds in their favor. You're supposed to buy those odds. And while you're not 100% certain, there is one thing I am 100% certain of. Fiat money will continue to debase on an accelerated basis, because that's pure mathematics, especially when your global GDP is shrinking and your numerator, which is global debt, is increasing because you have politicians who don't understand math. And, you know, in confession, Justin Trudeau in Canada came out and said he's never been very good at math. Okay, we should actually have a restriction for politicians who are not good at math. That will never happen, but it's like saying, oh, it's not his fault. Well, fuck you, it's not his fault. You voted him in an office. If you go to a surgeon who has horrible eyesight and you ask that surgeon to operate on you, you're supposed to get what you, you know, the risk. You don't hire surgeons with shaky hands and poor eyesight. You know, in similar light, you shouldn't hire politicians that say stuff like the budget will balance itself, etc. So over to UQ. Mathematics runs the world. Math is the base layer of language. Understand what that means. regardless of what your mother tongue is, everyone understands math. If you speak Chinese, if you speak English, if you speak Spanish, you can't speak to each other, but you all understand the same mathematics, okay? Math is the base layer of language. Bitcoin is the base layer of monetary energy, which is math plus code. It's the most beautiful technology I've ever seen in my life. Go and watch the blockchain in action if you are visually, if you're visually stimulated. I was a Bitcoin skeptic until I actually watched the blockchain in action. And I'm like, are you kidding me? As an engineer, this is beautiful. And no one controls it, and it's truly decentralized.
According to experts, it will take a lot more time to clear the damage to the global economy caused by the coronavirus lockdowns and the geopolitical tension in Ukraine. As the global economy continues to look bleak and prices skyrocket, a plethora of investment vehicles seem on the edge of a catastrophe. The crypto economy alone has lost over 22% of its value since May 2, falling from $1.83 trillion to $1.41 trillion in less than 10 days. Major stock market indexes have also been at record lows over the past 2 weeks. The S&P has lost around 10% of its price in the past month. What do you make of the situation, and how long do you think it continues to impact the crypto market? Please drop your comments below, and don't forget to hit the like button. Thanks for watching.